In this presentation, we will discuss contributions related to non-governmental NFP not-for-profit organizations, gifts, and contributions. Contributions are voluntary, unconditional, and non-reciprocal. So obviously when we're thinking about a contribution to an organization, if we have a not-for-profit organization, we're considering the contributions which are in essence kind of a form of income to the organization. To be a contribution, then it's got to be voluntary. Obviously, it's got to be a voluntary thing for the donation or the contribution to take place. It needs to be unconditional to be a contribution, so it's going to be there's no conditions on it for the contributions, and it's non-reciprocal. Non-reciprocal means that nothing else is being received in return for the contribution. So a contribution is made, no goods and services are going to be received in return. This is one of the more confusing types of transactions, and you could see why it could be confusing, because you could consider a situation where, what if someone was to donate something, what if it wasn't even cash, and have a contribution and then receive something in return? It would be more like a barter situation. But remember that whether there's cash involved or not, if something was received and something was given, usually the assumption then, the default assumption is that that's going to be a business type of transaction. It's not going to be a contribution. So the contribution has to be non-reciprocal. That's important also because note that some types of charitable organizations may have a contribution kind of component to it, but also has something that's non-contribution kind of component. For example, if you were to give something back, in essence, but the price of it would be way over the value of the thing that you're giving back, then you might have to consider a situation where you have, part of that transaction being a contribution, part of it not being a contribution. It's going to be really important to consider the fact of this non-reciprocal type of nature anytime we have a situation where we are considering providing something back. What is that going to do to the definition of a contribution with regards to the organization? So a transaction of cash or other assets to the not-for-profit organization or the settlement of liabilities. So the most common form of contribution, of course, will be cash, but of course, another type of asset can be given other than cash. We could have property or some type of investment asset could be given to the organization, and they could also settle the liability. That's another form of contribution if the liability was going to be settled for the organization as well. Contributions can be either unrestricted, they can be restricted with regard to time, or they can be restricted with regards to purpose. So if we were to donate to the charity, we may say, hey, this is a good charity. I'd like to donate the money. Whatever you do is good. Your charitable organization is good. You're welcome to spend that money in accordance with your mission, whatever your mission is within that type of organization. However, we might want to get more restrictive. We might say, we're going to put money into this charitable organization given some restriction, some condition. That condition may be some time constraint condition on the money that's going to be put in, or we might put a condition on the purpose. We might say that we want this money to be put in. We know you do a lot of good work all over the place, but there's this specific issue that is concern to me. It's something that I want to personally contribute to. I know that's one of the things that you do within your nonprofit. I would like my money to go to that. Pledges. A pledge is a promise to give cash or other assets to an organization. So if we have pledged something to an organization, we've basically given a promise that we're going to provide something in the future. This is similar. If we compare this to a for-profit organization, remember the contributions that are given are similar to revenue for a for-profit organization. In a for-profit organization, we record revenue when the work was done. Something had to be done to get the revenue, which means we would have had to provide goods or services. At that point in time is generally when we record the revenue. If we're talking about contributions, then typically when we get the contribution, we would obviously be recording contributions at the point in time we get them, and that would be similar to the revenue in a not-for-profit type of organization. But when we have pledges, notice a pledge is a promise. So you could think of that situation as, okay, there has been a promise. That's going to be similar to a situation where the work was done for a for-profit organization, but we didn't get the money yet, an accounts receivable situation. So we got the debit of accounts receivable, credit to sales. Here there's a pledge, so we got a promise, we did the work to get a promise here, and you have a similar kind of situation in a sale on account in a for-profit type of organization. We've got a pledge to get what would be similar to income, which would be the donation, and that's going to happen at some time in the future, and we're going to want to, of course, collect on that donation. A conditional promise to give is one that depends on the occurrence of a specified future and uncertain event to bind the promiser. So if there's some kind of conditional pledge, it's going to be conditioned, of course, on some type of future event, some type of uncertain future event. A conditional promise to give is not recorded until the conditions have been substantially met. So if there's going to be a conditional promise until the conditions are substantially met, it is not going to be recorded. Now, of course, we're still going to want to track this information. So if the condition is met, we can track that information, but we're not recording it. Why? Because to record it, we would typically have to record it to some type of revenue account. And if there is uncertainty, especially if there's substantial uncertainty as to the condition that might be met in order to get the revenue, then we shouldn't be recording the revenue in the time period that the pledge has been made, given that condition. An unconditional promise, on the other hand, to give depends only on the passage of time or demand by the promisee for performance. So an unconditional promise would be more similar to what we would think of if we had a sale on account in a for-profit organization. In other words, if we made a sale on account, we invoiced the client, the work was done, we expect to be paid. The only thing that's holding things back is the time involved. There's some type of time period. There's not some type of condition that needs to be met at some future point. So that's going to be similar here. There's no other condition. A pledge was made, the promise was made. It's only some time point in the future. It's only a time situation as to whether the pledge is going to be given in theory. So unconditional promises are reported as support in the year the promise is made. Therefore, we're going to record this kind of similar to an accrual basis, recording similar to kind of revenue recognition type principle when the promise was made, even though we have not yet received the cash, similar to an accrual method as opposed to a cash method. They are considered restricted until it is clear the donor's intent related to the contribution has been met. Gifts in kind. A gift in kind is a donation of materials or service. So if we were to provide a gift in kind, it's a donation to the organization for materials and service rather than cash. Unconditional gifts in kind reported at fair value. The entity would include both contribution revenue and an expense or non-cash asset. Donated material used or consumed in providing services. So they're going to be reported as part of the cost of goods, as part of the services. So in other words, of course, if we get a gift in kind, some type of donation, if we're going to use that within the services, then we're going to record the item for revenue, and then we're also going to be including the expense related to the use of that item in the service. If we're not using it immediately within the service that we are providing, then we're going to put it on the books as a non-cash asset as we put it on the books. So if we got a gift in kind, and then we were going to use it, we got some type of supplies, if we're making sandwiches or we're making meals, and that's part of our charitable process, we may then get the groceries or something like that that would be used, gift in kind. We would record the revenue related to it, which would basically be a credit. And then if we were consuming it at this point in time, we would have the related expense as we consume it in with regards to the service that we provide. If we're not using it at this point in time, then we would record it as revenue, increasing revenue, and record the asset on the books, the non-cash asset that was received. Contributed services. FASB requires recognition of contributed services at their fair value if the services received create or enhance non-financial assets or require specialized skills, are provided by individuals possessing those skills, and typically would need to be purchased if not provided by donation. So in other words, when you think about the idea of services that are being contributed, typically they're not going to be included as revenue because much of the time that the services are being provided, they're not specialized skills that are being provided, and they're not there to create or enhance non-financial assets. They're going to be non-professional skills within the service of the organization. For example, if we were to put on something like a meals or something like that, and the services are provided to help clean up the location and set up the location, that's not going to be a type of specialized skill, and it's not going to create an enhanced non-financial asset. So it would not then be included as revenue towards the organization or some type of income or similar to revenue of the type of organization. However, if the contribution wouldn't be included as a contribution, in other words. However, if we're talking about something like legal services or something like that, where you have a specialized skill that is being donated, which you would normally have to pay for if you didn't have that donation of that specialized skill, then that is something that could be then a contribution. So non-specialized, the general rule, most of the donations, most of the skills that are being provided will not be included as a contribution, as similar to basically income in the non-for-profit. If it is something that's going to be specialized, think of the trades, such as a legal trade, possibly accounting information. Those are things that could then be included in the non-profit as a contribution. Donation of land, building, and equipment. They're going to be recognized at the fair value at the time of donation. So you'll think about the land and the building or something like that, equipment that's going to be donated to the organization. How are we going to put that on the books? We're going to recognize it at the fair value at the point in time of the donation. They can be donor restricted or unrestricted. So the donor could put restrictions on this type of assets that they donate to the organization. Buildings and equipment classified with donor restrictions. So if they're classified with donor restrictions, then the donor restrictions are assumed to have expired when the asset is placed in service. So if we put the asset into service, then we would assume the restrictions to have expired unless donor restrictions limit the use of the asset for a specific period of time or for a specific purpose. So notice, of course, when you put land or building or equipment in, if you donate that to the not-for-profit organization, it might be the case that the not-for-profit organization takes that and then uses it within the organization. Or it might be that they take that and want to sell it with regards to the organization as some kind of a donation that was just not cash donation, and then possibly sell it and get cash for it. So then the consideration is, do we put that equipment into service within the organization, or do we not put it into service? Special events, receipts from the event. Revenue from special events are reported at gross rather than net gross unless the event is peripheral or incidental to the not-for-profit organization. Direct expense. Direct expenses related to providing the benefit, and they're reported separately. Then we have the fundraising expense. Fundraising expenses related to promoting and conducting the special event.